Welcome back to the channel, guys. I'm your host, Buckning, and today we are going to talk about my two stock picks for the month of November 2020. So if you're new to the channel, welcome. Consider hitting that subscribe button, leaving a like, leaving a comment, hitting that like button, and if you find any value, please let me know, and we'll continue putting $100 a week into this tax-free savings account portfolio to build a dividend portfolio right in front of your eyes. If you're not new, welcome back. And so, yeah, we'll just get right into it. We'll just go into the update for the week here before I give you my two stock picks for the month of November. So today, currently, we are sitting at $903.30 for an account value. We are down $18.70, down 2.03%. For the week, we are down $15.89, down 1.73%. For the month, down $12.73, down 1.39%. For the 3 months, we are down $6.70, down 0.74%. Same for the 1 year and all. And that is of the current time of 2:13 p.m. in Toronto. Current my time is 12:29, so about lunchtime here. So we will get this updated as much as we can. As you can see here, we only own two positions in two companies, which is BMO and Bank of Nova Scotia. 5 shares of BMO, 7 shares of Bank of Nova Scotia. You're probably wondering, if you're new to the channel, why do you only have financial bank stocks? Because we just started building this portfolio. If you're not new, please, you already know why. But just to clear that up, because everyone always seems to ask that question. It seems like a common theme, not a big deal. So the first stock that we're going to talk about for my stock pick for the month of November that I will be buying a position in and continuing to buy a position up to a certain point, probably mid-November or something like that, will definitely be there. So that I'll just leave that because that's just like this. So this company currently has a dividend yield of 6.29%. The 52-week high on this one is currently $27.78. 52-week low is $12.58. This company was originally founded in 1887. It is a global company, a very strong company. I have a lot of faith in this company. And if you're in Canada or maybe even the US, I don't know about the US, but definitely if you're in Canada, you have had some sort of interaction with this company, whether it's with your employer or just yourself, or you've heard of this company. And that company here, oh geez, hair in my face. For this company that I'm talking about, ticker symbol is MFC, which MFC.TO if it's in the Canadian market, and that is Manulife Financial Corporation. So for the day, it is currently down 0.41 cents, down 2.25%, down again for the week, which is 3.52%. For the month, 6.07%. Down for the 3 months is 3.52%. For the year, it's down 27.94%. And for the past 5 years, it is down 19.60%. And you guys are probably asking, why are you picking a company? Why are you picking a company that is dropping in capital, I guess, depreciation now? And here's why. This company is an insurance company. It is a massive insurance company. They pay a very nice dividend yield of 6.29%. Yes, over the 5 years, over the year, they have shown a downtrend. Not even a downtrend, but just like down year over year. This company is in Canada operating as Manulife Insurance Company. In the US, it operates as in a subsidiary company called John Hancock Financial. And then it operates in Asia as well. In 2019, this company brought in more revenue from Asia than it did in Canada, where it was originally founded. And that doesn't hold true today, but today, most of the revenue that this company produces is out of the John Hancock Financial down in the US. And following behind that, second biggest revenue bringer is the Asian market for Manulife Insurance Company. Now, the reason I picked this company and to answer the question that might come up is why are we picking this company, is because this company In the past, what is it, like since 2008, I think it was 2008, this company was sitting at a price of almost $40. I think it would almost hit $40. And we haven't seen, a price this low in the past 4 years, I would say. In the past 4 years, this company used to sit at a stock price of $20, $21. And so it is definitely undervalued. And I truly believe it'll come back, with the stability of its business plan. I have a lot of faith in this company, and everyone has exposure to it. I mean, absolutely, almost everyone has exposure to this company, whether it's with your employer, with yourself, and that's what I meant when you have exposure to that. And it's an insurance company. The thing is, we may not like insurance companies because they probably suck you dry of your money for that peace of mind, which is fine. But they are a staple in society these days to protect your loved ones, as I'm sure they would say in About Us, on the About Us tab on their company site profile. But the reason I'm picking this company is because of the current price, to be honest. It sits at $17.79 currently, or $17.80, sorry. But the actual is $17.77. So I'm buying it for the price, but I'm also buying it, second reason, for the dividend yield of 6.29%. However, Manulife, the record date, so the date that you have to have this on record in your portfolio and registered, is the mid of November, somewhere around the 17th or 18th, for you to qualify for the dividend in December. And so that's why I have two stock picks this month. And so the next company that I want to talk about is going to be a company that is also in Canada, one of the largest consumer discretionary. I think they call it consumer discretionary. It's a staple, obviously, in the Canadian market, in Canada alone. This company was founded in 1919 and it's headquartered out of Brampton. I think Brampton's in Ontario. But this company is absolutely massive. It's for this stock here. This is more a defensive stock for me. This is more of a position that I want to hold in my portfolio. Well, not mine. This portfolio here that we're looking at, that you can see on screen, as a defensive stock. The reason I say defensive is because it's needed regardless of what's happening in the current economy. And so this company that I'm talking about here is ticker symbol L.TO, but I won't show that. I'll just spell it out for you, is Loblaws. Loblaws currently sits at $67.04, down 0.15%. For the past week, it is down 2.06%. For the past month, down 5.2%. For the past 3 months, down 4.23%. For the past year, I do believe we do see some, so down 3.79%. But for the past 5 years, we've seen some growth of 18.39% in capital appreciation. And so this company here is just a massive company. You'll probably recognize some of the names that I'm going to throw out there that are subsidiaries of this company. So you have Shoppers Drug Mart in Canada, which is a little, I don't even know what to call it, but there's pharmacies in there and stuff. Real Canadian Superstore. If you've been to Superstore, you know what I'm talking about. I do believe in smaller areas they have something called No Frills or independent grocers. This company also owns PC Financial or President's Choice Financial, and so I guess it's kind of a financial stock, but not really. And then it also owns very popular TNT Supermarket. When I was a kid, I used to remember going there just for your supermarket things. But yeah, great company. This company almost employs almost 200,000 people. 200,000 people. That's like double the size of the city I live in. And so very large company. The current dividend yield on this one is at a 1.88%. as of 1:22 p.m. in Toronto. Or is that right? Nope, sorry, 2:22 p.m. in Toronto. The 52-week high on this one is $77. 52-week low is $59.01. PE ratio of 24.36, which is great. But yes, this company is just absolutely massive, and it is more of a defensive play in this portfolio here, because, like I said, regardless of what's happening in the marketplace, this industry in particular, which is I guess retail or consumer discretionaries, is always needed, and they are taking innovative steps to work with this company. And I believe in the future, a lot of tech companies will be looking at these companies like Loblaws, and trying to help them innovate in a way where it's safe for everyone. I mean, even Superstore now, I think you can purchase groceries on your phone online, and then you just go there and drive, and you sit in your vehicle, and it's already packed up, and you just load it in your vehicle and you just head out. You don't have to go through lanes anymore to figure out what you need, what you want, And so Loblaws is the company that I'll be buying in the second half of November, because of the record date of Manulife, which ends in the mid of November. And so you'll see these two positions being added to this portfolio alone. And again, Loblaws is a defensive stock for me, still paying a dividend, not very high at 1.88%, but a very stable company, in my opinion, as it is a staple in the Canadian economy. But yeah, that's pretty much it for this video, guys. Hopefully you guys did enjoy. And remember, I'm not a financial advisor. I'm definitely not your financial advisor. And do your own research, do your own due diligence to figure out, how to build your portfolio. This is just my opinion, and the portfolio is just to show you how easy it is just to start investing in the marketplace, especially with this new app, Wealthsimple Trade, fairly new for any new investors. But before we end the video, I just want to I just want to give a thanks out to, I'm probably going to butcher this, but it's Hao Tang, for using my referral code. It was activated, what's today, the 28th, about 6 days ago. Deposited $100. He gets $10, I get $10. And so shout out to Hao Tang for that. And if you guys are going to start investing, there is a link in the description below to use that referral code. Once you deposit $100 into the tax-free savings account, you will receive $10. I will receive $10. Win-win. We can start investing and go from there. So other than that, guys, hope you guys did enjoy the video. Leave a like, subscribe, comment, whatever it is that you do, and we'll see you in the next one. Bye. Oh, before I go, here's the proof that I put $100 in, and we'll see you guys on Friday to purchase some Manulife. Bye.